Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. It's good to be here again on another great day. Our portfolios are looking good, especially for all of the hard work we've been doing building out these portfolios. These portfolios are looking good today. We're going to get right into it. And if I say anything that you deem worthy of a like, then you can go ahead and hit that like and subscribe and notification bell, right? All right, so let's just get right into it. Let's go. The S&P, should I say the NASDAQ or the stock market at whole, is hitting another all-time high. Look at that. We got the Dow, S&P, and NASDAQ all closing higher today, all. But what really ripped was the NASDAQ. It absolutely mooned. So big tech was really bringing the NASDAQ up. You had companies like Tesla that was really ripping, that's bringing the NASDAQ up. As a matter of fact, let's just look at this article. Tesla shares gain as Elon Musk reveals rare 1 billion stock buy in sign of confidence in EV maker. So he is given a sign of confidence. You guys know that they got this new pay package, and he is saying, look, I'll buy $1 billion worth of my own stock to prove to you guys that Tesla's not done. We're going to kill it. Okay. So that's one of the things that was bringing the overall NASDAQ up. Let's keep it going. Now, what you got to be looking at now is how to position yourselves. What stock should you be buying? What stock generally go up when the Fed is about to cut interest rates? And I just believe that you need to be dollar cost averaging leading up to. For those of you that are in money moves, I gave you a whole list of things to look at. Please look at the video that we left you guys, right? You guys are supposed to be ready, set, and loaded, okay? Let's just talk about a few of them right quick. Here also, we want to keep the family fed. So we know we just had the IPO of Klarma, right? Buy now, pay later. And you could see it was up almost 6% today. Why is it up 6% today? Because these are the type of companies that are going to be doing better when the Fed is in a rate lowering cycle or rate cut cycle. Now, there's a reason why I didn't buy it on open. This is why I didn't buy it on open. So if you bought it at the top, then you are still down, even though it is up by 6%, you're still down by 5%. Look at that. I'm sorry, you're still down by 8%. All right. And so I just don't chase and I just wait. But these will do well in the long run. So even if you bought at open, you're not doing too bad. Now, I had someone ask me about Oklo, a couple of people. You did the right thing for those of you that was in money moves and you took a haircut. You did the right thing. Never apologize or ask permission to take a haircut. Now, I chose to hold, and it ran up 7%, and the technicals was showing short term it was time to do some selling. Then it went up 10%. It did, and I still decided to hold. Well, now it's up 15%. It could cool off. It could cool off by the time we're talking, to be honest with you. By the time you see it, it could cool off. But I'm just in it long because of what they do. All right. Now, what they do, that's your homework. You got to find out what they do and why I'm in it for the long haul. I am in it for the long haul. So this is one of my long-term holds. I'm going to hold this at least to the end of the year, Oklo. And we're going to see what it's going to do, right? And if I think the market is too frothy, then I will be looking to take some profits later. But right now, as it stands, I am holding. We can see here Oklo on the charts. I shared this on the hourly. It looks like it is overbought. You can see that. Look like it's ready to turn around. But when you dig deeper and you go into the day, it don't look as bad, even though you had this big green wick candle up. Now, technically, yes, you could be taking some profits here, and that's a safe thing to do. But remember, I'm longer. So you're doing the right thing. I'm just longer on this stock, right? And you know what? Could have took a little, but you could see that this is the daily. You could see that it wasn't long. You got 1, 2, 3, 4. We have 4 days of its remaining oversold. So let's see what it does this time. And you know what? You can always put a trailing stop loss on. But you that asked that question, you did the right thing. So never look backwards like, oh, I missed that. No, you didn't. You did the right thing. And in the long run, you're going to make money. All right. So I appreciate the question. Now we're going to listen to Mr. Tom Lee as he talks about the stock that will do well as the Fed lowers interest rates.
Improvement in liquidity.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path? I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah. So I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the MAG 7 and the AI trade gets a lot of liftoff. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum. And seasonally strong, I think they could make a monster move in the next 3 months, like huge. And the third, of course.
Now we're going to come back to that. Okay. So let's stick to stocks and then we're going to get into crypto. He talked about the NASDAQ 100, right? So I want you guys to see what's in the NASDAQ 100. The NASDAQ 100 consists of 100 of the greatest, right, non-financial companies listed on the NASDAQ stock weighted. Okay, so it's heavily weighted. So you can see that these big tech companies like NVIDIA, Microsoft, Apple, Alphabet, Broadcom, Intel, Adobe, Cisco, Advanced Micro Devices, ARM Holdings, Qualcomm, Netflix, Meta, look at that. Palo Alto, CrowdStrike, you could see all of these. Datadog, you could see all of these, all right? It just goes on and on. Amazon, Tesla, you see it. Starbucks, Airbnb, Dollar Tree, O'Reilly, Ross, Lululemon, Athletics. It's all of these companies that he says is going to do well, which a lot of these are in the NASDAQ, period. But then you got the NASDAQ 100 is more heavily weighted, more condensed, right? Consolidated. And so these, he believes, are going to go well. That was Tom Lee, and that's what he said, okay? So I like IWM, so small caps. So you got a small cap ETF that will start to do well for those, the Russell 2000, I believe will do well. They generally do well when the Fed is lowering interest rates, IWM, okay? But at some point, you got to stop buying because they have already bottomed out, right? So remember, the Fed lowering interest rates is over a period of time. So we're really looking out the next year. We should and could have 3 rate cuts this year, meaning this month, October and December. There's no FOMC meeting in November, okay? So I'm going to go back and I'm going to switch right now into crypto, but I'm going to bag up a little bit what he said, and then we're going to go right back into it.
And seasonally strong, I think they could make a monster move in the next 3 months, like huge. And the second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum. And seasonally strong, I think they could make a monster move in the next 3 months.
So he says Bitcoin and Ethereum, okay? So those of you that are in Bitcoin and Ethereum, which I am, I have a ton of it. I have a lot of money, 5 figures a piece in each. And I will tell you, not only do I have that, but in Money Moves, we have a Bitcoin stock and we have a Ethereum stock. Guys, BMNR and MSTR. All right. That's what we have. That's no secret. I've been talking about it here too. Right. And so what we're doing is just dollar cost averaging in while they're low and in hopes that we will have a pop when ETH and Bitcoin actually starts to go up. But what you don't want to do is be overweight, meaning you don't want to have a ton of money in Bitcoin and Ethereum and then a ton of money in a Bitcoin and Ethereum stock also. Follow? So let's continue to listen to Mr. Tom Lee.
If we were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the NASDAQ 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
You guys see what Mr. Lee is talking about, Tom Lee, about what he expects Ethereum and Bitcoin to do, just all of a sudden just break out. Truth be told, I'm looking for a breakout between now and the end of the year. And if it doesn't happen, at least I'm in it. I'm in it to win it. All right, good people. So when we look at crypto, we can see that things kind of chilled a little bit. They haven't fallen off a cliff. Look at that. Over the last 24 hours, just flat. I would call that flat. That's not even a full percent. We're still up 3% over the last 7 days, right? Ethereum cooled off, still up almost 5% over the last 7 days, but has cooled off. So what do I do, especially in the large cap crypto? I start looking for double digits or anything close to double digits that are down, right? So we can see here Sui's down 5%. So that's where I would be putting some liquidity if I was buying, but I did not do any buying today because things are kind of flat and I'm in my position. See here? So the memes I'm not fully committed to yet of really, really getting in, all with the exception of the one that I've been buying and it's been doing well. Now, this one, I know you guys are like, why are you talking about that little coin? Well, this coin, it surprised me, I'm not going to lie. Today, it was down by as much as 10% today. It just went down, it dropped, and then I bought some. I made an alert. It was down about 9%. It was actually down 10% when I made the alert, and in seconds when I made the alert, it was only down by 7%, but I had made up a smaller purchase. Remember, small cap, small money. And then it just went back up and it just keeps doing exactly what the name says. It keeps pumping just for fun. But in this pump for fun, I am up over 100% already and wished I had put more money in there. So I kept talking about it here and I kept talking about it in Money Moves. And I've been talking about it 2 weeks ago. I've been talking about it for the last 3 weeks. No, the last month. So someone asked me last week, they said, hey man, I've been missing, is it still too late to get in? I said, no, it's not too late. Just only put small money in and wait on red days. It's just that simple, good people. So that was a week ago. So now if he bought a week ago, what he purchased would be up about 77% for a meme stock, okay? So now it could fall hard, right? So now what do you do with that? These are the type that I actually swing trade. It falls, I buy, it run up, and then I get ready to sell. But right now, since I'm up over 100%, I'm gonna just set a little stop loss and just lock in my wins, okay? You need to look at stocks that are going to do well while the Fed is lowering interest rates, because some of them do better while the Fed is lowering interest rates. And when he finishes, they're done. So some of these moves you have to make now before the Fed or while he's lowering interest rates. Okay. And then some perform better once the interest rates have been lowered, right? So you got to make sure that you time these right and just start dollar cost averaging and not dumping all of your money in, okay? So come join us on Money Moves, all right? Money Moves is where we are putting all of our buys and sales. That's what we're doing with the new portfolio. All of our buys and sales will be in the new portfolio in Money Moves, including my crypto buys, which I've been buying. I'm in full positions pretty much at this time. So the buying that I'm doing is very small. I just want you guys to know that if your portfolio is not up nicely today, you need to recalibrate and look and see what's in there, because building true wealth takes time. All right, good people, pray for these allergies. But hey, I'm going to smile anyway and keep it pushing. I love you guys. Live, love, laugh, and learn.